When I was first starting out in freelancing, everyone told me you had to spend money to make money, and boy, did I spend a lot of money. What is up, everybody? My name is Tyra, and I am here to teach you everything you need to know about 1099 taxes. Here on the Keeper channel, we create resources for freelancers, independent contractors, gig workers, and anyone else who files or should be filing business taxes. Anyone who grew up having water balloon fights know that only 10% of the time is actually spent throwing water balloons. The other 90% is spent filling them up one at a time. And that is how it feels starting a new business. Just replace brightly colored water balloons with accountants, realtors, attorneys, suppliers, and a mounting pile of bills. And next thing you know, your wallet is screaming. But don't worry, there is a light at the end of the tunnel. In this video, I'll teach you how you can write off all of your business startup costs, even before you've earned a dime. Let's get into it. So first, what exactly is a startup cost? Startup costs refer to business expenses that you spend money on to launch your business, possibly before you've ever even made any money. But Tyra, what if I rack up a bunch of startup costs for a few months or years before I officially open for business? I'm glad you asked. The very first year you file taxes for your business, you can write off startup costs from several years prior to that. Now, like I said, you can be racking up expenses for a few years before you get your business off the ground, but you can only start writing them off after you've officially been in business. But what counts as officially in business? It's the day you started contracting work or actively bidding on projects. That's right, you do not have to be making any money yet. As a freelancer or sole proprietor, you just have to be actively trying to make money to count as officially in business. If the IRS wants to see proof of work you're putting in and what actions you're taking to actively try to make money, you can show them your bids on Upwork, cold messaging people on LinkedIn, or giving potential customers discounts and freebies to warm them up to you and your business before they make a purchase. The key is to be really hustling. If you believe in yourself and you're actively trying to get this business off the ground, the IRS will believe you too. That means you can't just throw together a half-hearted website or email list and call it a day. Now, that's for freelancers and sole proprietors. If you have an LLC, partnership, or corporation, you don't have to do all of that. Your official start date is when you filed your formation documents. What kind of startup costs can you write off? Now that we've covered what you need to do to start writing off your startup costs, let's talk about what kind of costs can be written off. So there are two main categories of costs you can write off: investigative and organizational. Let me break it down for you. So investigative costs are what you spend on figuring out if you can make money off of your business idea. Some examples are doing market research and getting to know your target audience, hiring consultants or business coaches, renting an office and paying for supplies and utilities, or wages for employees and training before you've opened. Organizational costs cover bureaucratic expenses you need to pay to be allowed to run your business. If you're a freelancer, this may not apply to you since not everyone needs a business license or LLC to start working as a freelancer. But some examples of organizational costs include legal fees, partnership and LLC filings, business registration, and seller's permits. And if you're wondering if you need an LLC, watch our video on why not everyone needs one. We have it linked down below in the description. What isn't a tax-deductible startup cost? So everything we just went over are tax-deductible expenses for your business, but there are some startup costs that aren't tax-deductible. Sadly, the IRS won't let you write off every single cost you've accumulated when starting your business. The no-go costs include any type of interest payments, tax payments, certifications to get started in a field that's new to you, like getting your real estate license or something, and money you spend trying to buy another business if that sale never ends up going through. So just keep this in mind when calculating how much money you'll need to spend out of pocket to start your business. How to write off your startup costs. Started your business? Check. Figured out which costs can be written off? Double check. Now you're ready to actually write the startup costs off. So how do we do that? You can't just write off your startup costs the way you write off a business meal or something. The IRS requires you to spread them out over a 15-year period instead of taking the write-off all at once. This is called capitalization and amortization. So for example, if you rack up $30,000 in startup costs, you can write off $2,000 in 1 year of running your business because $30,000 divided by 15 years is $2,000. If you are hoping to take a little bit more right off the bat, look into bonus amortization, which lets you take a little more in the first year of your business. If your startup costs are $50,000 or under, you can write off up to $5,000 in year 1. So what happens if your business folds? Don't worry, if for some reason you end up going out of business before 15 years are up, you can cram in all of the startup costs that are left in your final year's tax return. So say you've got $30,000 in startup costs and your business folds in year 4. Normally you'd have to write off just $2,000 a year, but in year 1, you take advantage of your bonus and claim $5,000, leaving you with $25,000 left in startup costs. You write off $2,000 in year 2 and year 3. So now you have $21,000 by the time you go out of business. You can write off that entire $21,000 off of your last business return. Ka-ching! So guys, start that business. There is no excuse to not take advantage of those tax deductions after all. And while it might not have the same sweet satisfaction of smacking your siblings or friends with a water balloon, startup costs are a nice tax break for newbie business owners. And with the help of the Keeper app, you can keep track of these expenses from day 1. Keeper will automatically scan and record all of your eligible write-offs for you. So when it's time to file, you are ready to go. And with that being said, guys, that is all I have for y'all today. In the comments below, let me know what your business is or what your dream business is and what you think your startup costs would be for that dream business. If you would like more easy to digest tax content, make sure you give this video a like. And if you're not already, make sure you hit that big red subscribe button down below and make sure your notifications are on so you can get all of the alerts and stay up to date with all things self-employed taxes. Thank y'all so much for watching, and I will see you in the next one.